We're counting down the days to the end of the cycle, and it seems like this time is no different to prior cycles. We're looking at how things are repeating, not only for Bitcoin, but also for the traditional stock markets. Today, we're covering TradFi and Bitcoin, looking at how this is all playing out towards the end into that final peak, and how what we're seeing at the moment seems like there is still further upside to go, even though there are guarantees or perceived guarantees in the market that the Fed should be cutting rates, and how this is playing out in the cycles. It seems like this time is not going to be different to others, where many are going to get caught on the sidelines. Hit the like, subscribe to the channel if you are new here. We've just passed the 1000th day in this cycle. Prior cycles have gone for roughly 1070 days, anywhere up to around 1100 days. So if we use the first time frames, we're about 70 days to go until the end. 70 days puts us somewhere around mid to the end of October. Now that doesn't mean that the cycle ends at exactly that point. No one has that crystal ball. The idea is that we watch how the market is responding to price action at that time. Because that is a time frame, like a time target, then we need to see how the price action is going. Is it looking strong? Is it looking weak? Weak could mean that it's already had a significant run into further higher prices and beginning to show signs of weakness, potentially like what's happening now, getting short-term reversal signals. That's what we're looking for at that time target, just like we do with price targets. As you get towards price targets, you can start to see the market consolidate, maybe even put in a correction. So that's the first thing, because I'm going to bring that up later in the video as well. So if you've got an idea of that time frame, great. The next thing is the cycles themselves. This is the composite of the 5 and 10-year cycle in the red. The blue is the actual cycle for Bitcoin, so basically the price action. In 2020, we had a very similar event, similar in the sense of the emotional turmoil that was caused in the market. Obviously, it was the COVID dump. Many refer to it as a black swan. Whatever it is, it's happened. The markets tanked. And we saw something similar this year in April. So about 3 weeks later from those lows. And so that's what gives the red line this pattern. So a big crash into that first quarter or late first quarter, early second quarter, and then the recovery. And the market really didn't look back from that point. And we've been covering something very similar with the S&P 500, basically what's happened through that cycle as well. This is the 5-year line, so the COVID dump, the recovery, and then the market basically climbing to fresh highs. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. Through this period, quarter 3 into quarter 4, it was almost a given that the markets had to correct. Although we did see a correction into that first and second day of August, that led to 3.5% down. It's now put in new all-time highs. So again, it's still positive towards the end of this cycle, especially for Bitcoin. Bitcoin's done similar things here. It's put in fresh high prices and has since begun to consolidate the move. Does it go down further? Obviously, we have to wait and see, but the cycle is looking like it could go down a little further here into August and September. You get that dump, consolidate, and then the move higher. So I've also timed in the 10-year cycle. So the composite here, combining the two, the 5 and the 10-year, as this is something that Gann tells us to do. So Gann analysis going back over 100 years here, combining all of the knowledge that the market has provided and using these rules moving forward so that you can give yourself a roadmap to what might potentially happen next. And as for Bitcoin, seeing as we don't have all that much data, about 15 to 16 years, well, we got to do the best we can. 5 and 10 years are there. As for the S&P 500, we can go back 80, 90, 100 years, and for the Dow Jones, over 100 years. And so if traditional finance is moving similar to basically money creation, money credit, global money supply, and Bitcoin is following suit, there is evidence to suggest that Bitcoin is becoming more and more correlated towards the end of this cycle with traditional finance. While it's continuing that, there's no reason to doubt it thus far. There's no signs that it is breaking away from that correlation yet. The 5 and the 10-year composite are looking relatively good. We've also got the 2017 cycle as well. That was the composite there. You've got the 2017, which is looking relatively strong, similar sort of pattern. Now, 2017 was that final bull market top for the second Bitcoin cycle. We're now in the 4th cycle for Bitcoin. We can throw on the 2017 movement. Very, very similar, but it has been curve fit a little more than the other cycles. You can see we go down into these lows, a recovery, correction, and the market climbs higher again into another correction here. It did push a little higher earlier on, but the main trend of that cycle is playing out so far. Put in another fresh high, consolidation. Now the next part is where things might change, where we have to go back to the 5 and the 10-year composite cycle. So watching this one here to see if this plays out before we get a nice end to the year. The 2017 cycle just shows a short consolidation, which is this red line at the top, and then a fast move up into that final top. But I have both of them on the chart because of the time frame into the end. Should this cycle go out to a similar length as prior cycles, that would take us to October. And the 2017 comes in at around September. So basically pushing in to a news catalyst like the interest rates. Now, I don't think the interest rates are going to do enough to stop Bitcoin, basically put in the top. I would suspect it has to do with Bitcoin itself rather than just an interest rate, especially if price is able to maintain the bullish structure, 50% level, worst case scenario, $99,000. The top of the current price down to that level there at 99K is still only 20%. And so if you've been tracking this cycle from the beginning, or you've gone back and done your homework, the corrections have roughly been around 20%. So each of these moves through 2023, early 2024 were 20%. The only 2 times we've seen more than 20% was the correction of 144 days in 2024. And then also the last correction we saw here, that one there was about 32%. So prior to, or excluding those two 30%, basically everything's been around 15 to 22%. So worst case scenario, to maintain that bullish structure from this high, we get consolidation. The news catalyst comes out being the interest rates, and it doesn't go the way of the market perhaps, or it's a buy the rumor, which is what looks like is happening at the moment in the stock market, sell the news event because the cut happens and everyone's already priced it in. Everyone's talking about it. I don't think there's any sort of surprise element there unless there isn't a cut so far. But if that does happen, 20% still only takes us back to the 50% level at 99K, which is still holding relatively well. It would just put a pretty big dampener on the movement so far. And the movement so far has continued, the price action here has continued to close above the 7-year resistance. So that's still relatively strong. Of course, anything can change in the next 24 hours. We've had a few closes just above. Maybe we get some wicks down, some testing of the 110 to 112K level. At the moment, the consolidation remains in a strong position here. Speaking of the interest rates, this continues to get higher, and this is the probability that there won't be a cut. Of course, the market's been talking about a cut for absolutely ever, but the probability continues to get a little higher here. It's at 15.4% now, which means the cut is at 84.6%. And if we look back just a couple of weeks ago, when we had some of the other bad economic data announcements, this was way up at 97%, and there wasn't even a chance of the market, of Jay Powell pausing the interest rates again. So being no cut. Now we've got a 15% chance. So you can see how quickly this stuff can move with each day as we get closer and closer to that event. Now, come back to the interest rates and the market sentiment and how that's affecting the stock market, and then how Bitcoin is also being affected by what's going on in TradFi at the moment. But I think it's important to note the amount of green months that we have in a row so far. We're into our fifth, even though the last couple haven't really put in huge gains. You've still got just single digits here for June and July. The data shows that there is 2 times in history that it's gone 7 months in a row, 7 green months in a row. And I think that's important now because of the current price action and where we are in the cycle. 1, 2, 3, 4, should this be a green month for August, 14 days to go, 2 weeks to go, that would be 5, which means 7 is the max that it's ever done. It could go to 8, maybe it does a correction and then it keeps going. But if it was going to be 7, well, that would take you right out into October. That's just one scenario that could play out to the end of the cycle. A big steamroller into that top kind of takes everyone by surprise now that we're broken out of these highs. And the stock market is also continuing higher. New, fresh, all-time highs, even though the sentiment is relatively bearish here at 46%. So we have 46% of AA members feeling bearish about the stock market while it is at all-time high prices. I don't know where they get these people from and how they continue to get it so wrong time after time. They're looking at where this thing is going to be in the next 6 months, but essentially it's their feelings right now of what's going to happen in the next 6 months, and it's basically been wrong every single time. It's a fantastic contrarian indicator if you want to use it that way. So looking at the last time the AA individual investors here, the American Association, was this bearish, you've got to go all the way back to April and May, which by now you should realize is this period. That was when they were most bearish. So they're getting their survey done at the time thinking next 6 months is going to be even worse. April, 6 months later is October. We're about 2 months away from that. And they were their most bearish at that low. And looking in towards October, it seems unlikely, not impossible, but it seems unlikely that the market would drop that much further, back all the way down below those levels. Of course, some will have a different opinion, but just looking at what the data has produced and where the market has gone from that, it seems very unlikely at this stage, which I think is also going to be very helpful for Bitcoin and the remaining time left in this particular cycle. So this next 2 months are obviously going to be super important based on where this consolidation happens. Does it happen above the line? Does it happen below the line? From there, can we see another move higher? Which is why I put out that video around conservative price targets. So you come back to the channel, realistic and conservative price targets that I popped up last week. You can check that out after this video, looking somewhere around that mid 130s. July, a month and a half ago, as an example, that seemed ridiculous that we were looking at mid 130s. Where we are now, should this consolidate now for another few months, leading into these news announcements over that coming up in the next 30 days, it doesn't seem all that crazy. If we start to see the market action head towards the price target areas, around those time target areas that we talked about at the beginning of the video. So looking out towards that area. Does it mean that I think the cycle is over in 2 months at the mid 130s? No, because I don't know for sure. But what I am focused on is around that time frame, around that price target, should we get that far. Because some of the signals are suggesting that could be an important area to be watching in the market, especially with the consolidation at these higher levels. And just how we use that sort of information is based on the probabilities. And so this is the way that you can get profits from the market, even though you're not trying to exactly forecast where the market is going. You're just using the rules, just like one of our traders here has done in one of his last trades, using the rules that we teach. 2.5 grand on the profit, paid for the membership, pays for the indicators, and more in a single trade. If you want to learn more about that, link is in the top of the video description. But essentially what I'm talking about here, going into more detail so that you can then implement it into your short-term plans or your long-term plans, is exactly what we are practicing and teaching there in TIA Premium. So congrats to our member, Fluffhead, making me say that on a YouTube video. Back to the markets. S&P 500 looking relatively strong, but what happens next after that point? The timing looks relatively on track here for some consolidation around that time target here. 30 odd days to go for the interest rate meeting. Should this be a buy the rumor, sell the news event? Well, the 5-year cycle, funnily enough, also saw consolidation around late Q3, early Q4 before the cycle continued on, before the price continued higher. So if we start to go into that sort of holding pattern, at least it should be above the previous highs. Similar sort of thing here for Bitcoin. Should it hold out at these higher levels, consolidate, and then start to move higher, I think that's going to be even stronger for the remaining part of the cycle and potentially push past this 2-month window towards that first time target. Another signal that popped its head up last week was the USDT Dominance. Broke down and then quickly closed back above previous swing lows. That is using a GAN Swing Pro. You can get that on the TIA indicator suite. The breakdown and close back above is a short, well, from a short-term weak point, it could continue to develop into something larger, which is potentially what this stage of the market's at. What I mean by that, Bitcoin consolidating here, Ethereum also holding ground at the moment, altcoins continuing to lose ground, and that money then going back to stable coins, in particular USDT Dominance. When you see the trend of the market break higher and then break back underneath the previous swings, it generally suggests that the trend is slowing. And so in the case of the USDT Dominance, that is bullish for stable coins, bearish for crypto. When the market goes down, obviously bearish for stable coins, bullish for crypto. And in the short term, it seems like we've got another one of these patterns playing out. You can see the breakdown here. That closed higher. It started to trickle lower there. And then you saw this big rush into stable coins away from Bitcoin and altcoins. And that was through that correction from May into June. Now, of course, after that point, we got the low and then the market started to go higher again. That's in the case of Bitcoin and alts. But it seems like we're at another crossroads where we might be developing into something like this, which then takes back market share from Bitcoin, Ethereum, altcoins, and that goes straight back into stablecoins. The saving grace here is that there is a lot of overhead resistance, 4.4, 4.5, and then the diagonals and the 50% at 4.7 and 4.75. So it's got to do a lot of work to overcome these levels. If that breaks through, it's awful for Bitcoin and cryptocurrencies. So it's a bit of an early warning sign to keep watching. If this breaks through, consolidates here and keeps going, I think that could be the end. This could be it. And we were all wrong. It was game over. But if it does continue to run higher but gets rejected here, good news. We should be heading back down to test these levels. Could take a bit of time. We've talked about time in the video already, how this is all lining up with potentially interest rates, market sentiment, the S&P 500, the Bitcoin structure, timeframes towards the end of the cycle, and then this leads us into another attempt at 3.7. But note overall, for as long as we've been covering this now, coming up to a year, would be a year in roughly October, that the market, well, the stablecoin market has still not been able to break 3.7%. So a cycle high could be formed in this gap, 3.7 to 4.1. But ideally, if it is going to be a huge party out there, it breaks 3.7 and a cycle top is formed between here, 2.5 and 3.7. So where does that leave everything else? Well, let's have a look at Ethereum, 3.8%. It's consolidating at the moment, but it so far has been rejected off the diagonal, and that diagonal is the entire structure of the market here. Basically, the lows 2015, 2017, but mostly 2015 to 2019 so far been rejected. So if it does continue to consolidate, not too bad. Probably going to have a pullback on ETH BTC eventually because of the amount of time that it's run up here, coming towards the 4%. And as we've looked at the 10-year resistance level, I think this cycle still has some further room to run, could get up to that 5.3. But at the moment, I still think it's a little bit hard for it to get back above 5.3. ETH against the US dollar, that's still got good news in it if it has further to run versus Bitcoin, because of course it could keep running towards all-time highs, 5,000, and our next target was 5.2. 2K, so 5,200 that we talked about in this video right here. And for the Bitcoin dominance, which isn't looking great at this point in time, it's getting very close to the overbalance in time and price. It's met it in time. So basically, the move to the downside is longer than the largest move to the downside, which is a good sign for ETH and the altcoins, but it hasn't met the price target yet. It's almost equal to that price target right now. So essentially, nothing has really changed in this cycle yet until it breaks 58.5%. So if this starts to break down, we'll have the overbalance. Even if it rallies back up, that's a good sign. Time and price have been met. I suspect we could get towards that breakdown. Then it rallies because all of that money freaks out. It leaves ETH, altcoins, goes back to Bitcoin as Bitcoin corrects into one of the price targets we've looked at here for support, somewhere around the 110. Maybe it goes as low as 100, but I hate to say that because people would start to reference it. I'm looking at least back to around the 110 to 112 region for the consolidation. That would freak the market out, your ETH and your altcoins, which would then give Bitcoin dominance its rally. And its rally for, if I can find my chart here, USDT dominance. That's where you get that rally as well. Alts going down, ETH going down, Bitcoin going down, at least in a small area of the market or for a minor amount, could lead to that rally back up into the 4.5% or so, which then leads on to that final leg, and that's the end of the cycle. So that's how I think the opera is playing out. The dance is coming about. And if you want to choose me to be your dancing partner, hit the subscribe button, like down below. And if you made it this far, leave me an emoji with the little dance icon. You can choose your male or your female emoji. I'll cover the bonds in a future video because this is continuing to climb. Meanwhile, people or the market is expecting a cut. So that's an interesting one developing right now. All right, guys, like, subscribe, see you back at the next one. And the reports are coming out this week. So make sure you subscribe to those. Link in the top of the video description. Till then, take care and peace out.